got this. I think we're good. Okay. All right. Trying to get all my technology set up here. So here we go. Would you mind control the camera for me today?
Okay.
Can you follow me on this? You gotta have strong arms. You have strong arms?
Oh, for real?
Okay, look, they're giving you hearts. They already appreciate the fact that you're doing this. See, that's how cool on Periscope. All right, here we go.
Okay.
Is anybody out here using Periscope? So I'll tell you a little bit about Periscope, and this is obviously off topic, but I think in business you try a bunch of cool different things. You don't know what will work and what will. You don't. So Facebook Live, I get like 3 to 5 people on my live streams. And I did a Periscope, and our last Periscope we had 295 people on our live stream. Pretty cool, right? You know how much that cost me? Free. Zero, it's free. So my third Periscope I ever did, I had almost 600 people on the live stream, which is pretty cool. So as Jesse's talking to you guys about video, these are a lot of the things that you want to keep trying because you find things, and like in our world, YouTube has been very big for us, Periscope has become very big for us, and it really gives us a chance to share. We're kind of in this environment now where this voyeurism aspect people love. They want to be in your life, especially if they're working for you, under you, they trust you, if they're your customer. So I recommend trying some of this stuff because again, don't know. You try something like Periscope and it becomes really big. We'll have people come in and go out of this scope. We'll probably have 100, 200 people plus join us today. So again, just a recommendation of following up what Jesse said, video, live streaming video is becoming very big. But today what I'm going to be talking about is a couple different things. We're going to talk about how you can easily make money with business credit financing, but we're really going to spend half of the day today talking about business loans. I'm going to talk to you about exactly what it takes to get a business loan. Whether you have credit, whether you have collateral, whether you have cash, we'll talk about exactly what it takes. We'll talk about some real examples. And this way, you'll be able to offer loans for your customers and even have the ability to make money on the loans you offer. That's pretty cool, right? Because everybody needs money, and when you can help them get money without even, in a lot of cases, paying for them to do so, then they can get money, which helps them buy more of your stuff. So, have you ever heard of business that failed? A lot of you, I think everybody was in here when I told my story. I definitely have. I've been there, I've lost everything, and built it back up. So, the question becomes if you've ever been there, and I talked to a lot of people after they came and said, thank you for sharing your story because here's my story, and had a very similar experience. Look, a lot of business owners unfortunately do fail. Statistics are about 1 out of 5 businesses fail within the first 5 years. Or the first year. Within 5 years, about 50% fail, and that increases to about 75% of businesses fail, or about 3 out of 4. But what's interesting is I've been up here before and asked the question, how many of you expect to fail within the next year? Not one person raised their hand. It's interesting about running a business, right? Because we never expect that to happen. And I remember when I started my credit card business, my wife had asked me that question. She said, what are you going to do if this doesn't work out? And I just looked at her stunned because it was like the one thing I hadn't even thought about, right? Like, I had everything else planned out. And I'm like, I don't know. Like, I never had even thought of that. And then I immediately shut down the idea of that in my mind because that's just the way we are as business owners. We just don't think about that, right? But the reality is statistics are against us. So we have to be prepared and make sure that we have as much access to capital to carry us through, especially the initial beginning stages of a business, because this is what business looks like, and this is what business failure statistics look like, okay? So what you see here on the left is, you see on the bottom, this is how many years you are in business, and you see at the top the percentage of businesses' failures that take place. And so what we see is, we see that the longer the life cycle of a business, you start to have more and more stability. And this is why banks don't want to lend you money in the first 5 years or so that you're in business, because as you can see, from year 1 to 5, that curve is pretty much freaking straight down. Like it's just dropped. And then, then you start to prove yourself and then you come out. So that's exactly what business failure and success really looks like, is that the longer you're in business, the longer you have a chance to prove your concept, the more stable you become, and the more lendable you become. But let's be honest, when do we need money? It's usually in the beginning stages of the business, right? We don't usually need money 5, 10 years in. It's good to help us scale and grow, but to be able to prove concept and actually get to that level is very, very, very tough. That's when we typically need money. So again, we talked about this yesterday. Per SBA, the 2 main reasons for business failure have to do with management issues, bad decisions and lack of experience from the owner, and insufficient capital or lack of money. To me, again, these 2 things are spot on exactly the same thing. Because the reality is that when you have more money, you can afford to make more mistakes. You can afford to mess up, and you have the capital to actually carry you. Your air conditioning unit can go out, you can run a marketing campaign that fails. There's a million things you can do and test and not have to actually lose your business. And I use Twitter as an example because Twitter has enough cash on hand, again, to go 412 years continuing to lose money and still have money. But the rest of us, most of us can't even go like 412 hours with that happening. We're like, we would be in serious trouble. So to me, again, this is cool. This is great news. We all hear that the majority of businesses fail. Wow, right? We try to block that out. But what we learn is that these reasons that they fail are actually completely controllable on our end. If we learn to get capital, then we can actually have a significantly better chance of making it through these first 5 years. And as we do, then we have a significantly better chance of succeeding. So what it comes down to is, hey, that's good news. A lot of businesses fail because they don't have access to money. But if we get access to money, then our chances of succeeding are significantly better. The same with your customers. So where would you go if you need money? So that's my question to all of you that I'd like you to answer. So if you needed money right now for your business, where would you go? Ty, I love it. Great answer. I hear bank.
Bank if you have the profile for
Okay.
your bank or.
So a lot of people in here say bank. I heard some people say family, but mostly what I heard was banks. Okay, so over 75% of business owners go to friends and family. Statistically, this is what the numbers tell us. You're like ready, double hand raise. You're like, yeah, my family, they're awesome. They're poor now, but they're awesome. And most also use personal assets. And then almost everybody uses personal credit. They're using their personal credit cards to fund it. They're using their personal assets. It drives my wife crazy because, like, to me, nothing's off limits. And she's like, all that personal stuff is off limits. You can't touch that. Like, what do you mean? Listen, it's just, I know it's just, it's not. It doesn't end up that way. But this is the reality. What happens? Most people get it from friends and family. We all rely on a personal credit. A lot of us rely on our personal assets to fuel a business. Okay, per the Department of Revenue, and this was actually in 2014, 1.2% of actual business loans actually came from conventional banks. So conventional bank is your Bank of America. It's your Wells Fargo. Okay, so all of you that say, I'm going to go to my bank to get money, that's the reality. Is less than 1.5% of people that actually go to get money go to their bank to do so. Okay, most money is now coming from what are called alternative lenders. Has anybody in this room heard of a company called On Deck? Okay, so we see On Deck now popping up in commercials. They're the first company to go public really in the merchant cash advance space, and they are an example of an alternative lender. And alternative lenders look at the strength of your business instead of the overall business, as SBA does, which we'll talk about in a second. I'll explain a little bit more. So if you think you're going to go to your bank to get money, it's usually not going to happen. Now, there are exceptions. Okay, I talked to at least one person yesterday that has a really successful business, been open for a long time. Well, guess what? He has a $10 million business. So is he going to go to an alternative lender? No. Where's he going to go? His bank. Why? Because his bank doesn't care about the loan, they care about the deposits, right? They want the $10 million in deposits. That's what they want. To them, that's value because that money goes in the bank and they reinvest it, and that's how banks work. So there's a point where you get to a really successful level where banks are the best bet to go. But when you're at the bottom end, they don't really care about your $1,000 a month in deposits. Like, it's not going to break the bank, literally, if they don't have that. So they don't care as much. So alternative lenders, they get a return on the money they put out there. Investors, they get a return on the money they put out there. They have more to gain at that point. So in the beginning stages, conventional banks just won't work for you. Okay, Bank of America, Wells Fargo, they're great, but they won't work for loans. But as you get bigger and more successful and have more money, they will, because they want your deposit business, they want your commercial real estate loans, they want everything that goes with a business that's a 7, 8, 9-figure business. Okay, so in 2014, the amount of money dedicated to SBA decreased by $108 million, and Bloomberg, I think, had one of the best quotes at the end of the year, which said, funding a small business, don't even bother with the banks. And that's really what it comes down to, is if you're looking for a loan, you cannot go to your bank to get it. I have so many people that think that that's the case, especially people with good credit. They think because they have good credit that they're going to walk into their bank and actually get money. But reality is that that's not really going to happen because, again, they're really lending to people that are very credible, very well established. Okay, so 86% of small businesses rely on credit or financing for survival, and I put my sources there so I don't just make it up because, as they say, 99% of statistics are made up. There's something like that. So I'm actually putting my sources so you can see here. 86% of businesses rely on credit or financing. 89% of business applicants were denied financing. So what happens is The majority of businesses need money to survive. And when you go in to apply, you're getting denied. That's unfortunately the case. And what's interesting about the statistic is that we often see about 90% of businesses fail, and then we see 89% of business applications are denied, and we think, I wonder if there's any kind of relation between those two. I mean, they're almost spot on. The bottom line is that people that need money can't get it. And they need that money to survive, and if they don't get the money, they typically don't. And that's a large part of what I do, because I believe in us. I believe in our ability to solve problems, to provide value, to change the world, right? And I know that if we have the money that we need to fuel that and make that happen, then we can make that happen. But unfortunately, a lot of things happen with regulation, with bureaucracy, where a lot of things are regulated away, and our ability to obtain money, our ability to obtain credit is inhibited, which makes it hard for us to survive as small business owners. So look, here's the reality. The old way of getting money that we're all used to is debt. Okay, and I ask this question to a lot of people I meet. I say, look, SBA is the most popular kind of loan we know of, right? It's the loan that the big banks offer. So we all know business owners. Like, there's nobody in here that doesn't know at least one other business owner, because like we all know each other. So here's the question. How many people have you ever really known, ever in your life, who've ever told you they got an SBA loan? Almost nobody. Now, I talk to people that say, I know one, or I know three, or I know four, or I know five. But that being said, what are you doing to my Periscope here? You're messing that whole thing up. Right, there you go. Okay, but the reality is that very few, I don't think I've ever met anybody here that's ever known more than 2 people that have got an SBA loan, right? I know bankers that have not met more than 2 people that have got an SBA loan, and they work at the bank that issues SBA loans. The reality is that we don't know anybody. So we all think we're going to go to the bank to get money, but yet none of us know anybody who's actually successfully done this. So there we go, here's the problem. And I call this the cash access problem, because really it's not that money's not out there. We just don't know where to go to get it. We think we know, we're like, we go to our bank, but our bank won't give us money. Every statistic shows us that. So if we think that we're going to go to a place that we know statistically won't give us money, then we have an issue. So to get approved for a personal loan, then what they're going to look, or a business loan, they're going to look at 3 things. They're going to look at what's called your bank credit, your business credit, and your consumer credit. We know consumer credit has to be good. We've seen people with 780 credit scores get turned down for SBA loans because they had one derogatory. They said it was on a major account, even though it was almost 7 years old, almost ready to drop off the credit report. You have to have good business credit. We talked about this yesterday. SBA loans require a FICO SBSS score be pulled. If your score is 850, you will not qualify for a FICO SBSS. Your FICO SBSS won't be high enough to get a business loan, because you have to have good business credit to have a high FICO SBSS score. So you can't get an SBA loan, which SBA now requires all 7As, which is your working capital loans, have a FICO SBSS pulled. They have a minimum score of 140 for FICO SBSS. SBSS pulls business credit scores first. And the bottom line is of all of this means one thing. If you don't have business credit, you can't get an SBA loan. It's that simple. They also require good bank credit. You know what you have to have an acceptable bank credit score called your bank rating. How much money do you think you have to have in your bank on average over 90 days?
$10,000.
$10,000.
And you can't have any overdrafts or anything like that.
Yeah, they look at overdrafts, they look at how many accounts you have, they look at a lot of different kind of factors. But the bottom line is you got to keep 10 grand on your bank on average to even have what's called a low 5 bank rating, which is a score, even the lowest score you can even really get to get money from a bank. So now you got to have a bunch of money in the bank, you have to have good personal credit, you have good business credit, and then they kind of want to see all the stuff too, right? They want to see projected financials, they want to see tax returns, they want to see bank statements, they want to see personal and business tax bank statements, tax returns. They want to see resumes to make sure you have the experience in a business plan. They want to make sure you have background checks. They want to have collateral, and usually collateral is equal to 50 to 75% of what you're borrowing. So if you want 100 grand, you got to present something to them that's worth 50 to 75,000. Now, I stood in the boot camp before and showed SBA's actual underwriting guidelines where they say take it all. That's what they say. They expect the bank to take everything as collateral they can. They want everything in your business, and then they want your house and everything else. And I've laid this out right here in their actual guidelines before. Okay, so they want them to take everything they can as collateral in case of default. Okay, so the bottom line is to get an SBA loan, to get a real bank loan is very, very tough. You have to have a successful business, you have to have good credit, you have to have money in the bank, you have to have a large amount of collateral, and they're looking at all these things for a reason. They're looking at your personal statements, your business statements, your tax returns, your projected financials, because they're trying to find the weakness. And the weakness is where they feel their exposure is, and with the exposure is the reason they don't lend. So if you think they're getting all this documentation just to have a big file, not the case, right? Like what they're looking for is they're looking to find out where your weakness is. They will pull everything from you to figure out what it is. And when they figure it out, it's usually where they feel their exposure is, which is the reason that they end up not lending. So most are not going to meet this criteria, and they're not going to get approved. And then this happens. Like that guy, that's exactly how you feel. Like SBA, and we talked about this yesterday, is that imagine if you went to your bank with this whole folder full of stuff, and then you realized you got turned down because they looked at your business online and what they found online was different than what your business name was on the application, just because you had ink behind it or without it. Okay, that's the reality of what really, really happens. So a lot of people are going through this process, they think their bank is the answer, they try to go to their bank to get money, and unfortunately the bank will not lend them money. But over almost $7 billion is lent to small businesses this year, okay, and most of the money, again, is not coming from these big banks. So the real problem isn't that money is available, and this is what you need to know. Money is pouring into the market for us as small business owners. People want to give us money. It's just not the big banks. And again, it's not that they're evil or mean, it's that they're government insured, and the government requires them be low risk. Okay, the problem with that is business lending inherently is high risk because most businesses fail. So it's not their fault, it's just the default of the system. It's just the way that the system is designed. Okay, and this is testimony, the video isn't actually working. So how to get business financing, we talked about all these things yesterday, right? There you go, hope you wrote down quickly, just kidding. You have to have your entity set up, you need a real business address, not a home address. You need to make sure you have a business phone number, fax number, 411 listing. You need to make sure you have a Dispute Suite website. James? Who's that? Okay, Dispute Suite website. You need to make sure you have a Dispute Suite website. You need to have a professional business email address. You need to have licensing. You need to make sure your listing is congruent online. Business bank account. We went through all these things yesterday, so I'm not going to go through and break all these down. You need to be credible in their eyes, right? And the way I explain this best is that when you have an application for credit, stop, and every single line item that you are being asked to answer, think, is what you're going to put down make you look credible? I swear to you, this drives my wife insane. Because to fill out an application may take me 30 minutes, and it's like 10 questions. I will sit there and I'll say, name. She's like, what are you doing? It's your name. I'm like, listen, I know what my name is. I'm just wondering of how deep they're going to look into this. And they're looking into aliases. She's like, give me the pen. So my wife might, I think she stopped in the middle of the later today, and she'll tell you that this is 100% true, because it's exactly what it is. As a matter of fact, now she just leaves the room. That's what she does. She just leaves now. Especially when we buy cars, she wants no part of it. She's like, okay, I told you what I want, I'm out of here, like call me in 2 hours and you're done with the application. But literally, you have to do that. You have to scrutinize everything they're asking, because they're asking for it for a reason. And you might not realize they are, but every line item you fill out is a credibility check within their system to determine whether or not you'll be approved or denied. And nowadays, computers make the majority of those decisions. So it's like information comes in and there's a series of checks that goes through. So if you use a home address, their computers instantly know that you're using a home address, and it instantly red flags the system. And then it gets pushed to that manual review, right? We've all been there. We fill out that credit card, that little wheel starts turning. Baby, come on, baby. And then we get that, oh, we'll let you know in 7 to 10 days, right? And we're like, we are screwed. And I don't know about you, has anybody in here ever got good news in the 7 to 10 days? Like, ever. It's never good news. You did? There's like one guy, he's like, you had it happen. You actually got approved. It's fantastic. Like, it happens. It's very rare. The majority of all the rest of us are like, oh, it wasn't good news. It wasn't. It was FCRA stuff where they told me the bureau they pulled to make the denial decision. So we don't want that to happen. We need automated approvals. So automated approvals aren't hard to find. We just have to know how the computers work and feed them. So that's why you look at every line item in an application, because they're asking the questions for a reason. And if you make sure that what you put on there makes sure that your business is reflective of being legitimate, then great. If not, you might even second guess applying, right? If you got a home phone, you might be like, does that make me look credible? Probably not. I'm just going to hold off here a day until I get a Ring Central phone number. Because if you don't, a lot could be on the line just by you doing something that makes you not look legitimate or credible in their eyes. So there's 3 different ways that you can get money. This is my own system I've broken this down to, okay? And I personally call this the 3 C's of lending. So there's 3 different ways. I know it's creative, but I need to think of a better name. So if anybody has a better name for this, let me know. It's not hard to think of a better name than the 3 C's of lending, but because I actually think this could be a message in itself because it makes so much sense. So this is exactly how this works. If you have a strength, you can get financing. Now, banks want you to have all 3 of these. They want you to have cash flow. That's why they're asking for tax returns. They want to see profit. They want the collateral. We talked about 50 to 75% of what you're actually borrowing. And they want you to have good credit, good personal credit, good bank credit, good business credit, right? But alternative lending is a little bit different. Because with alternative lending, what they're looking at is one of the 3s. If you have a strength, a lendable strength, one of the 3, then you can typically qualify for a business loan with these alternative lenders. There are alternative lenders that will lend you money based on cash flow, like on debt. There are alternative lenders that will lend you money on collateral, like account receivables. There are alternative lenders that, based on good credit, will give you financing, like you see 0% APR for like $50,000 or $250,000. Those are good credit programs. So you can get money based on the actual strength of your business, where you don't need it all to be perfect. These guys have figured it out, and what's happened is this. Banks have pulled back, and investors have said, there's an opportunity here. And this person that has collateral, well, guess what? If they default, we just take the collateral. No real risk to us. This business has shown for 2 years they've got consistent revenue that's increasing every single month. We don't feel as a high risk. This business, that owner that has good personal credit, we feel that that's worth actually doing something with. So these guys have come into the market, sort of flooding the market with money, saying we're going to lend money based on a strength instead of this overall perception of trying to find your weakness. It's literally the exact opposite of conventional lending. Instead of trying to find your weakness and exploit it and deny you, they just want to know what your strength is, and they'll lend you money based on that strength. So cash flow financing is the most popular type today. We see these all over our Facebook newsfeed. If you've been in business 1 year and have $10,000 a month, you can qualify, no credit score requirements. Marlon and actually were talking about a customer where he got $176,000 in 24 hours, and they got it with no credit even looked at. Well, that seems weird, but it's not. It's cash flow financing. Why would they do that? Because personal credit doesn't even matter. Because what they're looking at is, do you have money in the bank? Do you manage your bank account responsibly? They look at somebody and goes, this guy has 10 grand at the end of every single month. His revenues increase from month to month. They never have an SS. They don't bounce checks. Do we think this person's high risk? No. They've shown they can consistently run a business and grow a business. So they'll lend you money based on that strength. Now, these are cash advances, so they're just kind of like AMSCOT cash advances, where they look at your paycheck and determine whether or not you're lendable, versus actually your business bank accounts, where they're actually doing exactly the same thing. Okay, if you have more than $10,000 in deposits, you can be approved. There's some fluctuation here. Like if you've been in business 5 years and have like $6,000 in deposits, they may approve you. Meaning if you have a compensating factor like longer time in business or good personal credit, if you don't have it 10 grand, they may approve you. But 10 grand is pretty much the standard in this industry. Okay, it's really fast and easy money to secure. Like I have no exaggeration when I tell you that you can get a loan within 24 to 72 hours if you're moving quickly and if you have bank statements that are legitimate. Okay, and don't try to fraudulate your bank statements, because they know all those things nowadays. Has anybody heard about Rocket Mortgage? You guys seen this advertisement?
Yeah.
It's pretty freaking brilliant. So I was in DC with NASCO, and I actually was talking to the person that works the Hill for those guys. And I said, how does this really work? What they do now is so much of our information is accessible online that instead of them making you supply all your documents, they just go get it. They go get your banks. They go get your income. They go get everything they need virtually where you don't actually need it. And it's working that way in the business world too. What happens now is these services integrate that these lenders you work with directly into your banks. They'll go in and get, with your permission, the actual information directly from your bank account, so they don't even physically need a lot of your statements anymore. That's just the world that we live in, right? Technology's awesome. You freezing?
Yes.
Right? I felt the same thing. I've got like 10 layers. Poor Catherine, she's like walking around like with nothing on her arms and legs. So I agree. But it's fast, easy money. 24, 72 hours. They're just basically doing the bank statement review. You must manage your bank account responsibly, have consistent deposits. You can typically get about 12% of what your annual revenue is. So if you do $1 million a year in revenue, how much money is that? What is going on with you all today? I mean, it's easy. 120,000. And if you had 100,000, or we can't do it, but if you had $200,000 in revenue, for example, how much would that be? 24 grand. So basically 12% of whatever your revenue is. You're like, I didn't know there was going to be a quiz with the sessions. I wouldn't have come to begin with. This is high-risk lending as no collateral is pledged. And I say you need a 500 score, but now there's sources that won't even look at your personal credit. Like, they just don't care. Okay? I mean, unless you're in some serious trouble, like on the verge of personal bankruptcy, they don't even care about your personal credit. We see people with less subprime or sub 500 still get approved. So this works perfect for you and your customers because personal credit doesn't matter, and they can get money really quickly, really easily. Credit repair is considered a high-risk industry only because you are considered financial services. I am too. So is a real estate agent. So is an insurance agent. We still have done a lot of these for credit repair companies because we have a lot of pull with the banks that we work with. But just so you know that when you go to get money, you are considered high risk. Don't feel it's because of your industry. It's not. It's because all of us that deal with financial services are high risk. Insurance agents, real estate agents, mortgage brokers, we're all high risk because we're financial services. Okay, but sub 500 credit score, you can still get approved for this kind of financing. A second kind of financing is called collateral-based financing. Now, this is when you're using some kind of viable collateral to qualify for the loan. You don't need, and the way I look at this is that it's kind of like if you have one, you don't need the other, right? So on this one, you have cash flow. So you don't need credit and you don't need collateral. Now we move to collateral, and if you have collateral, you don't need cash flow, you don't need good credit. You just need one of the three. So with collateral-based financing, you're using some viable type of collateral to actually use as leverage to be able to actually get the loan. So even as a startup, even if you have bad credit, if you have some kind of viable collateral, I'll tell you some examples of viable collateral, then you can actually still come in and you can actually get a business loan just based on collateral, which is pretty cool. And the rates are really low. You can get rates as low as 2%, and a lot of collateral-based financing, you get rates under 5%. Guys, that smokes SBA rates. So that means you can get collateral-based financing with lower rates than even you can get an SBA loan, which is awesome, regardless of personal credit, which is pretty cool, right? So, some types of acceptable collateral include account receivables and purchase orders. So let's say you have a client that has a factory and they deal with account receivables or purchase orders. You know, for example, we had a customer that does all the plastic mugs for Busch Gardens. You know, the ones that you spend like $13 for like a Coke at Busch Gardens for? Yeah, they make all those. So what happens is Busch Gardens gives them an order. They got to produce 10,000 of these. They got to get the supplies. They got to get the labor. And then Busch Gardens pays them 2-3 months later. So they have to pay all the money to produce the goods, then produce the product, and then they have to wait 2-3 months after the product is delivered to even get paid, right? So that obviously creates real cash flow issues. Well, if somebody has those kind of account receivables and it's business to business, it doesn't work business to consumer. So if you have a lawn care business and you deal with residential homes, it won't work. If you have a lawn care business and you deal with commercial properties, it will work, right? Sure. So it's got to be business to business. The same with purchase orders. So maybe you needed something, maybe you're a t-shirt company and you're a t-shirt embroiderer. And then you need the actual t-shirts to embroider, you get a huge order. Well, you can get purchase order financing to get the t-shirts from your supplier to actually embroider. So this works pretty for a lot of people, and especially the manufacturing sector. If you're dealing business to business or government, you know, one of the most popular industries for AR financing is medical, doctor's offices, because they have to deal with insurance companies and they deal with Medicare and Medicaid. And getting paid is like a nightmare, right? So they use AR financing. It's common in construction, especially because they wait to get paid. It's common in industries such as medical as well. Stocks, bonds, 401ks. So if you have stocks, if you have a 401k, if you have bonds, if you have IRAs, those can actually be used as leverage to actually get business loans. And there's all kinds of ways you do this with no tax penalties at all, okay? So you can actually leverage your 401k, which is investing in other people's businesses, and you can actually use that as collateral to qualify for financing and get, like, the 401k financing is a 5% rate, for example. So really low rate financing, which is pretty cool. Inventory and equipment. So if you have inventory, so let's say you're a clothing store and you have a bunch of clothes. Let's say that you're a factory and you have like a bunch of inventory on the shelves. You can actually get a credit line, regardless of your personal credit, using your inventory as collateral. Or if you have equipment now, you could borrow against that equipment you own if you own the equipment free and clear. Or you can get loans to buy equipment, or you can get leasing to buy equipment even as a new startup business, which is cool. So So if you're starting a business and you need equipment, you can actually get financing even as a startup to get that equipment that you actually need. Real estate. You have commercial real estate that can be used as collateral. As a matter of fact, there's even financing out there called flipper financing, which is specifically designed for people that invest into residential real estate. So if you have some experience in residential real estate, you can get financing to buy the homes that you actually fix and flip. You can actually get 100% of the money you need to buy the house and to actually fix the home to be able to flip it. Business credit works really well here too, because you can get Lowe's and Home Depot and Industrial Supply and ABC Company and Sherwin-Williams. You can get credit with all those companies using business credit, which is perfect for fix and flips as well. Even in insurance. So do we have any insurance agents in here? 1, 2, 3. Okay, so there's something called book of business financing, where you can use your existing book of business, your residual, to actually leverage to get long-term financing. And it's like ridiculously awesome. You can get like 3 to 5 year terms, you get really low rates, and today we've not had one client ever get what they actually qualify for. They actually want way less than that because they qualify for so much more. So if you know anybody and you're talking to people out there that are in an insurance agency, what's interesting is that most people in the insurance industry don't even know this exists. And you can get a really low rate long-term financing. And again, you can earn a commission just by basically helping them out by letting them know they can get financing. A buddy of mine right now is looking to get in and buy an insurance agency, and that's exactly where this is also good. He can use the book of business from the agency he's buying to be able to get the money he needs to actually buy the business, which is pretty cool. So for all of you agents that are thinking about expanding, this is a great way for you to basically buy out your competitors, take them over without needing a lot of or any money out of pocket, because you're using their existing book of business that they built to actually get the cash flow that you need to buy the actual company. So credit-based financing, unsecured credit-based financing is a great way to get money for your business if you have good personal credit or a good personal credit guarantor. So if you do have somebody that has good credit, I was talking to somebody out in the room earlier, then you come in with a 720 credit score or higher, for example, then you can get financing even as a startup business, even with no collateral, even with no cash flow. You usually get about 5 times the amount of whatever your highest credit limit account is, up to about 150 grand. So if you have a $20,000 high limit credit card now, you can usually get 5 times that, which is about 100 grand. Pretty cool, right? Even as a startup. This program has the most amount of money available for a brand new business than any other program that exists today, unless you have a ton of collateral. Okay, we've had a guy that he owned a bar. He tried to get 25 grand in his bank. They turned him down. He had 750,000 in a 401k. We're like, all right, well, 750,000 work. He's like, I wanted 25. My bank said, no, you're offering me 750. It's kind of how the world works, right? Because alternative lenders will do that based on your strength. Your bank won't, because they want to see everything. And he was a bar, which they consider to be high risk amongst other things. This works really good for startups. Even as a startup business, you're able to come in and get 100 grand, 150,000 in unsecured financing. This is 0% business credit cards that you're getting for 6 to 18 months. So has anybody seen like 0% financing advertising? Get 50 grand of 0% rates to it. That's what this is. Okay, now, there are always a lot of sources will advertise them as credit lines, right? And I get people on LinkedIn all the time that say, man, are you interested in getting $100,000 in 0% credit lines? I'm like, absolutely I'm interested. But what I know of with this program is actual credit cards. So do you have a real credit line? And they say, well, no, it's actually credit cards. And I said, well, then why would you promote it as credit line? And they eventually stopped answering my questions on LinkedIn. This is kind of the way it works, right? It's like the guys that sell trade lines where I'm like, sure, give me an example of one person that got all this money you're talking about. For some reason, they never get back to me with that one example. I don't know what's going on. Keep contacting them, but they seem to disappear. Yeah, it's kind of a weird thing. So 0% financing, these are unsecured business credit cards, is what they ultimately are, which are pretty awesome because they're no duck. They don't require income tax returns and bank statements and all the things you need for a lot of other kind of financing. And the accounts report to the business credit reporting agencies. So we use this to expedite business credit building, right? Some people even refer to these as business credit accounts. We consider business credit to be credit you don't need a personal guarantee or credit for, and that's just terminology. Everybody is a little bit different. Some people call what we do corporate credit because you're building it for the actual corporation, but what we really consider to be business credit is credit you don't need a PG for, and it's regardless of personal credit. It's just terminology, so you see these things advertised different ways. But with this kind of credit, it does report to the business credit reporting agency. It does require good personal credit. It does require a personal guarantee. but you can get a lot of money and build your business credit at the same time, which is pretty cool.
Does it report to personal credit?
No.
It's just to business.
But it depends. If you go like to your bank, it's hit or miss. Like you can get a Capital One Spark card, you can go to your bank and it might report, no. But there are lending sources out there that do just this program where they'll go, and what they're doing is they're not a bank. They actually specialize in business credit cards. So they'll go out and get you 5 credit cards, for example, that are these 0% unsecured that only report to the business credit reporting agencies, right? So Ari, which sometimes comes to the events, that's his program as well. Ari's a great source for that program, as well as there's several other sources that we've worked out there that do really well on this program as well. So what they're doing is they help you go out and get business credit cards for your business that only report to the business credit reporting agencies. And they'll get you about 5 times the amount that you get on your own. So this is something you have to work with the source, and they'll charge you a fee, but it's worth it because you'll get 5 times more money than you'll ever get on your own. We had one guy that didn't want to pay the fee. We helped him go to his bank gave him $12,500, and the source was going to give him $75,000. Right? So you'll get about 5 times more because they know the cards that will give you the most. They know the 0% cards. They apply for them all in one shot, and then as a result, they're able to get you approved for a lot more money. Whereas if you go to your bank, the inquiries will eventually get you to a point where you're not able to get what you can get with somebody helping with this program. So there's also private money that's available. And again, if you have good tax returns, a lot of people look at Shark Tank and you think, okay, they're just going to give you money. If you have a really ridiculously good concept and idea that stands out, you might be able to get money from an equity investor that wants equity in your business. But private investors typically kind of fill the void that SBA has. You have tax returns, you have good, middle to good credit, and they'll lend you money based on often the net profits you have in your actual business. Okay, crowdfunding is very popular, doesn't require cash flow, collateral, or credit. You can go to a bunch of different crowdfunding platforms and get all different kinds of crowdfunding. But here's the deal. We all hear these stories of these crowdfunding campaigns that go viral, right? We all heard these stories. Well, a lot of them is bogus. What happens is they want $100,000. They put the thing up intentionally knowing that they're going to get close to it when saying they only want $10,000. There's a great guy out there that got money to do these crazy birdhouses, and this is exactly how it works. So he goes, okay, I'm going to put my GoFundMe account for $10,000, and I want to build these birdhouses and change the world. Okay, and the reality is that he really expected to get $100,000. He has $30,000 already committed from investors before he put that up. Then his investors poured the 30 in, and all of a sudden it goes viral. Goes, oh my gosh, this guy wanted $10,000 for birdhouses, and now he's got $30,000 in it. And then everybody starts putting in more money, right? Pretty smart. So know this about crowdfunding. Crowdfunding isn't something you can just put your gig up there and get paid. Because what happens is you typically have to have a lot of investors lined up to put their money in first, and then that starts things to snowball. Other people see it, and other people start to invest into it. That's how it really works. Okay, and I have somebody that I saw on Facebook the other day, and she started a GoFundMe account because she needed help from people pay off her medical collections. And somehow she was surprised when people didn't contribute to her funding account. She got very angry. She's like, why aren't you people paying my medical collection? It was hilarious. I thought it was pretty funny. She didn't think it was funny. I thought it was rather hilarious. And she would just create a GoFundMe account and expect people to pay off her collections. Like, why not? That sounds like a great idea. I'm in on that program. So don't expect that. Don't think you're just going to start a GoFundMe account. People are just going to pour in money. Most of these type of accounts are people you know or people you have committed. That's how it really works. And if you're smart with how you do it, well then you can actually get it to go viral. But a lot of times it starts with your own network. You can even get specialized funding. There's funding you can get for vehicle wraps. There's funding you can get for equipment, for signs, for those type of things as well. That's specialty kind of financing. So that being said, actually, and I've told you before that we have, and I'm not done. Actually, I'm going to do a quick demo and show you how we get financing and credit for other customers. So I think I still have some time here because Catherine's not standing up giving me this sign, which means I have 10 minutes. So I'm going to show you how we actually do it. And there's 2 things that I want to be able to go over and show you. One, I want to show you that I'm a visual person, so I believe that I learn better by seeing things instead of hearing things. So I'm going to show you the exact steps that we use to get financing for people and for business credit to kind of wrap up what we talked about yesterday and today. And that way, look, if you want to work with us, that's great. But even if not, you can see how we physically do it. So if that's something you want to do directly with your customers with or without us, you'll see exactly how it's done. Now that being said, we do have a ton of bootcamp assets, and my image is in here. If you text assets to that number, and what happens is I created a bunch of stuff for back in the day that I owned my credit repair business. So I have like social media content that you can use, PowerPoints, PowerPoints, free reports and guides you can give to customers for credit repair, as well as I've got a couple really cool guides for business credit as well, and a bunch of other cool resources I think you can use. So if you text assets there, we can get that for you. And I'm going to try to figure this thing out and see if I can get online here and mess up this computer. So we'll see if we can get online. So what I want to do is I actually want to show you exactly how this works in the real world. In doing so, and hopefully, Jesse, hopefully Jesse doesn't mind that I do this. Okay, so what I want to do is, again, I believe better, I learn better by seeing versus actually hearing. So I've kind of given you a good idea of exactly how business credit works. I mean, do you all feel like you have a general understanding now of how business credit works?
Yeah.
Okay, cool. How do you think about loans? Do you all feel more comfortable now with knowing the kind of ways you can get financing or you can help customers actually get financing based on their strengths? Are you going to send your customers to the bank to get money?
No.
Oh, good. All right, so we're doing good. So far you're 3 for 3, which is good. So we have something we actually created for the credit repair industry, which is called the Business Finance Sphere. And I want to walk through and show you in real time kind of a summary of what we talked about yesterday and today, so you can see exactly, one, how we do it, so you can see that we follow the exact same steps we're advising you. And again, even if you decide not to work with us, and that's fine, you'll at least see in real time exactly how this works. So we talked about yesterday basically the steps to be able to get business credit, okay, and here they are. We talked about building business credibility. We talked about getting set up with your business reporting agencies, getting your initial accounts, monitoring your business credit, and then continuing to get more and more credit, right? This is exactly how you build business credit, just so you can see that we follow exactly the same steps as what you should actually follow with your customers. So today and yesterday, we talked about these steps as well. We talked about setting up the business credit book, making sure they have a business name, address, the phone number, the website, the EIN, the business licensing. So you can see here that we practice what we preach, right? We have to follow the exact same system that we're actually guiding you. Now, our system is a little bit different than what you would actually be doing probably on your own, because what we do is we walk them through basically step by step. It's pretty customized to their experience. So for example, if you have a business name here, you click yes and move on. If you click no, then what we're doing is actually giving you access to the Secretary of State, which is what you're going to want to help your customers do. If you're not using something like this, you're going to want to see if the name is available for the Secretary of State. You're going to want to also view restricted industries. What are restricted industries? Porn is a restricted industry. I just wanted to say porn from the stage, which is cool. Pawn shops, guns, basically anything fun is considered a restricted industry. I have found, like, all the cool stuff are restricted. So if you sell anything fun, then you have a problem instantly, right? So, and then we kind of go through and help people with the education part, which is what you're going to want to do too. If you're using a system like this, it's all turnkey, as you can see. You're selling one thing to the customer, it's all done for you. You don't have to do it. You've got support and coaching and everything is handled for you. But if you're doing it, you want to follow the exact same steps. Help people with every one of these actual credibility steps. Now, we also talked about getting the business credit reports. Okay, and that's very important. You want to get set up. How much should you pay for your DUNS number? Gosh, you guys are good learners, okay? So how much your customers pay for their DUNS number? 0. You don't want anybody to actually pay for their DUNS number, okay? So in the you can come in here, you get set up with Dun & Bradstreet Experian. In fact, you can even pull your Experian information. And if you want, we can look at your company to see how many trade lines you have. We're right outside to the right. You know where we are. Dave is back there with me. Eric is back there with me. We can actually pull up your own business right here, and you can monitor how many trade lines you have as you're actually building business credit, which is cool. Because remember what we talked about yesterday, it all comes down to, oh, that's not supposed to happen. It all comes down to payment experiences. So, and we talked also about Walmart, for example. So with payment experiences, you know, when you're building business credit, it's very important to monitor your business credit reports, because what happens is you need to actually come in and you need to make sure that you have a certain amount of accounts on your credit report. If you don't have the amount that you need on your credit report, then you can't move on to the next step. So what's cool is that you have access, and if you don't, that's fine. You still want to get Experian or Dun & Bradstreet access, because what you need to make sure that you have is you need to make sure that you can see how many trade lines you have along the way. Okay, this just makes it easier because you don't have to pay for that. Okay, but if you do, if you don't have something like this, you still want to make sure you go through Experian or Dun & Bradstreet, because you will need to actually monitor how many trade lines you have. Now, when you start building business credit, I told you yesterday I would show you some more vendors beyond the ones that we talked about. So here's some vendors, for example, that you can actually use to initially build business credit. And there's all different kinds of things you can buy. You can buy office supplies and shipping supplies, and you can buy computers, and you can buy all kinds of things that are like for outdoor use. There's a lot of different things you can buy from actual vendors. And remember, vendors are important because you need vendors that will report to the business credit reporting agencies. Here's Quill, for example, that we talked about. And we actually need sources that will give you credit even when you have none. So through here, we just make it easy because one of the things we do is actually tell you the exact underwriting guidelines for each source, which is like awesome, right? We call constantly to find out what their requirements are so you'll know you can meet the requirements before you even apply, okay, which makes it easy. So who they report to, what the requirements are to get approved, even could go through in one click and actually apply exactly what it takes, what they actually sell. Because that's a lot of what building business credit is. I'm going to give you a heads up that the challenging part of building business credit is to be able to apply for accounts in the right order that will actually get you approved. And that's why, as you see here, we go through and tell you all the accounts that you actually qualify for. So that way, you'll see in this step, ones you don't skip ahead, your customers won't skip ahead and come in and actually start applying for accounts that they don't qualify for. So you're going to need, and I don't have enough time today or yesterday to go through business credit scoring, which I will probably do at the next boot camp. If I'm blessed enough to be invited back, I will go over credit scoring all with you. So Dun & Bradstreet, Equifax, and Experian have about 5 to 9 credit scores on their report, as we talked about. And so what we do is go through and give a lot of education. This is something, if you're not using a system like this, you're going to want to do for your customers. Give the education to them about what's on their credit reports, how to read credit reports, how their credit scores work. And we do a lot of that through training videos. You can see with our system, it's very little text. And it's video because that's how people basically learn. So we come in if they don't understand things, and we're basically giving them something like this, which is 2 to 10 2-minute videos that just explain how exactly credit scores work. So you know exactly how to read a credit report, how to get the credit reports if somebody actually wants to pay for full-blown credit monitoring. Okay, now after we do this, and look at the steps that we're actually following, so I want to tie this into what we talked about yesterday. We're talking about building credibility, check. Now we get set up with the business credit reporting agencies to see if you're there or fix any inaccuracies, okay? And here in our step 4, we actually come in and fix any inaccuracies, so it actually includes business credit repair. And you can actually fairly easily fix inaccuracies with the business credit reporting agencies. It's not like consumer credit reporting because there's no Fair Credit Reporting Act in the business world. So in our world, they come through and right here, they're actually able in step 7 to fix any inaccuracies by going right through the reporting agency system. Now somebody asked me this the other day, how do you fix inaccuracies on a business credit report? Here's the answer. Each reporting agency has an online system. It's usually available through their credit monitoring. Dun & Bradstreet's is called iUpdate. And if you go to iUpdate or you go to Experian and get their monitoring or Equifax, they'll give you an option of disputing inaccuracies. We found ridiculous success, like 80% plus of inaccuracies that we dispute get deleted off the credit report. Because again, most people just don't dispute business credit like they do consumer credit. It's uncommon. So because so few people do it, the reporting agencies kind of tend, from our experience, to go on the side of, well, this must be legitimate, and delete the item fairly quickly. But what we find is a lot of people that think they have business credit errors and ask about business credit repair never needed business credit repair to begin with. They don't have those accounts report to the business credit reports. Because again, about 95 to 97% of accounts don't report to the actual business credit reporting agencies. Now, as we talked about yesterday, once you get about 5 payment experiences, then you're going to want to help your customers start moving into other store accounts. Now, you see here how this is kind of grayed out and this isn't. What color is this? Oh gosh, that's awesome. I'm colorblind, and now apparently nobody knows, so I'm not the only guy, right? Cool. Oh, my wife helps me sometimes. Honey, what color is this? This is why I always wear like a solid on a white, because I'm colorblind. I have no clue of stuff. And I get jealous of all the people that dress like really cool. Like there's somebody whose shoes match their shirt. I'm like, no, there's no way I can do that because I can't see colors or shades. But apparently nobody can today, so that's good. So we see how this is grayed out, and we see how this is yellow for some of you, or orange, and I think I heard green out here as well. Well, it's just weird. So that means that this, you can't even qualify. Don't even bother. Okay? You don't meet the criteria, don't qualify. This is something, if you're not using a system like this, that you're going to want to help your customers with. The frustration becomes people try to jump ahead and start getting Amazon accounts before they have enough trade lines. And then they get denied because they don't have enough trade lines. So we counter that a couple ways. First, we tell you what you're qualified and not, so you know exactly what you can apply for and what you can't. In this person's case, they don't have 3 accounts, which is exactly why they can't qualify. Okay, and then you can even come in and learn more. Why don't I qualify? Well, because this will give you the actual underwriting guidelines to qualify, boom, 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 boom. And this stuff isn't published. We just have relationships with all of these sources that we're contacting on every couple, 2-3 months to update this information. And this basically maps it out. If you want no personal guarantee, this is what you do. If you want a personal guarantee, is what you do. And guys, we were talking about this last night. We were talking about personal guarantees. We were talking about, look, is credit available to PG or not? Sometimes it is if you meet the criteria, sometimes it's not. So we're mapping that out so you know. All the credit here is available without a personal guarantee. You just have to have the proper amount of trade lines to qualify. Here, we're mapping all that out. So basically, we've really created something you can't fail. We talked about a lot of retailers too. Staples, Seton, Amazon, AutoZone, Lowe's, Sherwin-Williams, Macy's, ABC Industrial Supply, Budget, Fleet Cards, as you can see here, Exxon, Conoco. Remember what I told you about. Most sources offer business credit accounts, and this is all the stuff without the personal guarantee, without the personal credit check. Now, just so you know where we are in the process, it takes your customers about 60 days to get here. So if you're building your business credit, it takes you about 60 days to get here. And for your customers, whether you're using our system or you're helping them go through this without it, it takes them about 60 to 90 days if you follow the proper steps to get to this point. Okay, so this is all the kind of credit that they can get in about 60 to 90 days. And if they then have this many accounts, which is 6 accounts total, then they can start getting into what we call the advanced accounts. Now you see, we have these broken down by tiers because basically you can't get approved for this credit without a certain amount of trade lines. So we help give you the trade lines you need to progress to more and more and more credit. That's how business credit building works. And I wanted to show you this because yesterday, I don't want you to ever think it's easy. The process is the steps. This is the steps of how to do it. But what makes business credit difficult is that you can't go for a Staples card before you do X. You can't get a Fleet card before you do Y. You have to apply in a certain order to really be able to get approved. And when you apply in the right order, so for example, when you have the 6 accounts, now you come in and start getting Best Buy and Staples and Office Depot revolving account. We saw Staples before, a net account, this is revolving. Home Depot, Tractor Supply, Shell, Walmart cards, okay? Now we're in an Amazon revolving account, and Dell account, and Sears, and Lowe's, and on and on and on. I just keep going and going and going. There's just more and more credit. All this credit becomes available with about 6 accounts. And it takes you to get those 6 accounts about 90 days or so to get to that level. And then it takes you about 120 or about 4 to 6 months to get to this level. So remember we talked about this. Well, you're fixing your customer's credit within 6 months. And during that exact same time, all the credit you've seen they can obtain, and all of this they can obtain too. These are MasterCards. These are fleet accounts. These are MasterCards. These are accounts you can start using at multiple sources, not just one store, in 4 to 6 months. These are accounts with $3,000, $4,000, $5,000, $10,000 limits you're getting with no personal guarantee, no personal credit check. Now, we don't expect people to go on their own through this. We have business advisors that work hand in hand. They call your customers 5 times the first 5 days to make sure that they have the customer calling them instead of you to answer all the questions. So that way there's no servicing, right? You make the sale, you put your $2,000 in your pocket, and then our actual advisors are reaching out. You can see right here it says help instead of chat because it's Saturday. Our team's not working, okay? But when it is during the week, it says chat. They can chat live. They can call. Our team is calling, emailing. You're going to have to do that. If you're not using a system like this or using our way of doing it, you're going to have to know that you can't just ever tell your customers and then be on their way. There's a lot of servicing involved. They need a lot of help. Okay, we'll spend 30 or 60 minutes on the phone with somebody, helping them set up their corporation, answer those type of questions, because those are the type of questions that people have. But what's nice about something like this is you can actually come through and help somebody get business credit, even as a brand new startup business, or somebody that's established can go through quickly. They say, yes, I have a business name. Yes, I have a business website. And they just go through quick, whilst people that aren't set up can go through and do it step by step. Okay, and then you also see here that we're talking about all different kinds of fleet cards, MasterCards. This is basically fleet credit and cash credit, commercial cards. Okay, and it takes about 4 to 6 months to get there. And then we separate these, but there's a lot of accounts that are available even as a brand new startup that just don't actually report to the business credit reporting agencies. So why are they here? Because they'll give you credit based on your business credit. So these guys don't report to the business credit reporting agencies. Lachlan used to, they don't. PayPal, Fundbox. That's actually a place where you can get funding for your customers. Amsterdam. These are sources that you may even see advertised out there that do report, but they no longer do. Okay, even Apple, T-Mobile, Sprint. You can get credit with all these places. They don't report to the business credit reporting agencies, but they'll give you money based on your business credit quality, which is pretty cool, right? So about 4 to 6 months to get through this actual entire this process of building business credit. And again, we also talked about business loans. Now, I haven't filled out my qualifier info, so my system isn't going to actually tell me that I qualify for anything yet. But if I go to finance my business, then right through here, when a customer goes through and enters their information, we tell them all the financing that they qualify for. Here's what we did. We came in and we said, wait a second. So I need revenue to get approved with on deck, but I don't know that. So what if I have collateral on deck? I could go to on deck with an 850 credit score and $2,000 a month of revenue. Do you know how much money they can give me? 0. Because all they do is cash flow based financing. So we thought, well, how the heck is somebody supposed to know? Why isn't there just one source, one place? Everybody can go, enter their information, it cross-checks it against hundreds of different programs and lenders. It tells them all the financing they can qualify for. Couldn't believe it, didn't exist. So, what do we do as entrepreneurs if there's a problem and there's no solution for it? You just make the thing, right? So that's exactly what we did. So this integrates with all the lenders, so then that way you'll know all the financing you can qualify for. If you have cash flow, credit, or collateral, all of that is in one place. So now not only can you get business credit, you can get business loans. And not only do you have the opportunity to sell this whole thing as a system and make a front-end commission, but you'll also have the ability to earn money on the back end when they actually get business financing. Okay, and Marlon was talking about an example where he made $5,000 on one of the last deals that he did, for example, on top of the actual front-end commission he did. So it's beautiful, right? Everything's in one place. So what do you think? Does this make it easy for your customers to get financing and business credit? Right? Without you having to do any of the work. Now, the cool thing about this is that we don't just put this in your hands and say, with great power comes great responsibility. Where's that from? Spider-Man. And all the ladies, what's up with that? All the ladies are like, Spider-Man. And the guys are like, I have no clue. I watch Iron Man, not Spider-Man. So this actually is everything you need. You can set up a sales team, run your sales reps from here. They have specialized training. You can track financing commissions. You can access our marketplace for the exact same items that we actually recommend to our customers as well. You can also come in, and we've made a step-by-step training. It's a 7-step training, just like your customers go through to get business credit. And you actually go through step-by-step, and we teach you how to sell business credit financing. Everything you need to know, step by step. It's less than about 3 hours worth of stuff. We teach you the cash access problem, what you should know about business credit, what you should know about financing. We teach you about the team, what they do, how to advertise and market. And you can see here, just like the actual finance suite itself, it's step by step with about 2 to 10 minute videos that walk you through everything you need. These are all scripts, the same scripts that we use to actually close sales. So we test everything and give you everything you need to actually run your own business credit financing business, which is pretty cool, right? So you get the step-by-step training, actually sell business credit financing. And remember, once you sell, you don't need to service. Everything else is done for you. And then we have a partner resources library, which has every single thing you will ever possibly need to be able to offer business credit financing as a service. So you got ebooks and marketing flyers, and you've got PowerPoint presentations, you've got videos and webinars, and I mean, just everything. You can see here kind of the quality of the actual stuff, and everything is customizable. So what I'm showing you is completely white label. You're putting your name on it, you're putting your logo, your branding on the actual system. It's not us. We represent ourselves as business advisors. You're representing this as your product, your solution, not ours. And then we just handle the advising and servicing for you. It's completely white label. You can see even the materials, every resource is customizable. Pretty cool, right? So it's all yours. So think about it. You're getting everything you need to basically run your own business, from ebooks and guides to PowerPoint presentations. We give you a year's worth of email drip content. A lot of you get emails from me. Well, we're giving you the same emails to be able to market with customers. All the resources you need to basically run your own business credit financing business, you're actually getting as part of the back office. And of course, there's way more than 2. I just don't have any of these actually clipped. I don't have the ebooks clipped. So you're getting everything you basically need, and we'll show you a lot of these testimonials, everything you literally need to be able to come in and actually operate your own business credit business and financing business. We even do training. I do live training every week just for our clients. We just had the last training session we had. His name is Jonathan Pritchard. He's on America's Got Talent, and he's a mentalist. And he was on our live coaching webinar that's only available for our clients, teaching us how we can actually do mentalism. It was like the craziest thing. Like he taught us, like in 5 minutes, how to do the alphabet backwards, which was one of the coolest things I've done over time. So those are the types of people that we have on. Marlon, you've heard from him and his success. We have a lot of our partners that are successful come on and teach you exactly what they do to be successful. We even map out everything we do to be successful, so you'll know how to market, you'll know how to sell. We teach you how to present, how to close, everything you need to know. So all you need to do is just ask your credit card customers, do you own a business? Are you thinking about starting a business? Oh, you are? Are you interested in getting money? Oh, you are? Okay, great. And then you basically go through our presentation that we map out for you, and then once you sell them, they're done. All the services is handled for you. Now, it's also important to note that as well as this, you're also getting everything for your business as well. So the entire business credit builder, you're also getting for your business as well. Sales tools, contracts, webinars. We teach you all about the financing programs. We've got financing cheat sheets. Let me give you an idea of like what the email content. So for example, so we're giving you about 12 months worth of email content, which a lot of you will recognize. It's the exact same emails that you're getting from us. And you basically put these in, and it's completely your content. What business credit building is. Because what we found is that we sell by educating, and that's my big belief. Is that if you want to make a sale in credit repair, business credit, whatever you do, you teach, you help people understand. And you're going to have people that do it on their own, and they become the best testimonials you'll ever get. And then you got people that will pay you and want to work with you as a coach and a mentor to do it for you. But that's big on our philosophy, is education and teaching. So we're giving you all the resources you basically need to be able to teach and educate and to actually get customers that way by creating a sales funnel, by doing all the things that you should be doing to actually provide value to your actual customers. Okay, so that being said, I'm going to be wrapping up, and just so you know, I will be heading out here today about 3 o'clock. Okay, I've got to leave today. I don't know if I'm going to be back Sunday. I don't think I will. So for all of those who would like to talk to me, that have questions, etc., you can feel free to, I'll be here till about 3. I'm back. Eric, would you mind coming up here? And Dave, would you mind coming up if he's in the room? Is Dave in here? Dave is like tall. I mean, who in here doesn't know who Dave is on our team? Okay, so everybody does. Okay, good. He's hard to point. This is Eric. My right-hand guy right here. So Eric will be here to help you when I'm gone today and tomorrow, and so will Dave, to answer any questions you have. And this was just a quick walkthrough of what you guys can do with us and how you should do it on your own if you're not working with us. But we'd love to schedule a demo with you. So we actually have sheets out there where you can schedule a demo. We'll sit down, go through it with you, answer any questions you have, and see if doing it on your own is a good fit or working with us is a great fit. We'll definitely spend that time with you and answer any questions you have. I will be here till 3. And I won't even break for lunch. I might have somebody get me lunch and bring it back. So I am here to answer any questions you have, talk to you, spend time with you, to answer anything you have on business credit before I have to head out. Okay? So I think, Catherine, you didn't give me this.
I stood there for you.
But
you were still in the zone. Dave's actually with a client right now, or else he'd be in here with you.
Okay, I was kind of freaked out because then you stood up and started pacing. That's not good for me. When you come up here, have you guys seen this? When she comes up here with her phone looking at it over the watch, that means you've gone over, just so you know. I figured that out. So you're not up here yet. You were walking, which is why.
You know all my tricks.
So listen, I really, really, really am blessed and honored to have had the opportunity to talk to you the last 2 days. My whole goal is that you leave with more information than when you came in with, that you know business credit, that you understand financing, and you understand how these things can benefit your customers. Of course, I would love for you to work with us because we created this for credit repair and it's easy for you to do so, but it doesn't matter if you don't. At least now you have the knowledge and information to be able to help your customers with the answers, whether you do or you don't, okay? But if you want more questions on business credit financing, work with us, any of those types of things, I'll be right outside there. I'll be here till about 3 o'clock today. And again, thank you so much for the honor.
Alrighty, so quick reminder, at 12:40 we will start our demo in La Breezeway with Savannah for Dispute Suite software.